What's going on, trading world? Welcome back to another video. In this video, we're going to discuss liquidity and liquidity grabs. This is an extremely important topic, and it's something that I was trying to learn about 2 years ago, and every time I searched a YouTube video, I just couldn't really understand it too well. So what I've done is I've gone ahead and created a dumbed down, simple, quick version of what liquidity is, liquidity grabs, and how you can use it to your advantage. I'm going to keep this video short, concise, and simple, so by the end of the video, you should know what liquidity grabs are, where liquidity lies, and how you can use liquidity to better improve your trading. Please hit the like button. It only takes a second, and consider subscribing if you want to see more content like this. Now, before we jump into the computer, you have to understand the market needs liquidity to move in its intended direction. And I was having a conversation the other day with somebody, and I was telling them, oh, you know, we always have these liquidity grabs and stop loss hunts, and it's always the market after us. And he was like, you know what, it's not really that. It's just that the market literally needs the liquidity to actually move in its intended direction. So if you know the direction of the market and you know where liquidity is laying, then you have a better probability of setting up your next trade. You have a better probability of winning your next trade, and you have a better probability of not losing your next trade. Now, what I'm about to say, I know it sounds super cliche because you've probably heard it all over Instagram, all over YouTube, whatever, and it goes something like this: if you can't see the liquidity, you probably are the liquidity. And you know what? I find this to be true about 80 to 90%. So let's hop into the computer and break down the concepts of liquidity, liquidity grabs, and how you can use it to your advantage. All right, we are in my computer. I'm going to keep this video really short, to the point, and easy to understand. I understand this is not going to be like some high level crazy ICT stuff, but you don't need none of that. All right, I wish somebody had made a video like this when I was looking for it, because I just understand simple, easy concepts because I can actually apply them. All right, you don't need to learn some crazy shit to become profitable. All you need to do is understand the basics, and that's it. So we're going to go over highs and lows liquidity. We're going to go over ranging liquidity. We're going to go over trend line liquidity and key level liquidity, and how you can basically use that. And I'm also going to share one tool in the end part of the video that you can also, you know, use side by side to match with your liquidity that you see on the charts. You know, you'll have another tool to aid with that, so to speak. All right, so let's first draw out highs and lows. All right, anytime that the market is basically in a trend, and everybody knows what a trend looks like, right? Anytime it's making a higher high and higher low, just this is enough for us to draw what we need to draw. Anytime we're leaving higher highs, higher lows, you know, there's liquidity sitting below these lows, because that's where majority of people's stop losses is going to be, right? People always put stop losses below market structure, and this is like good traders who know how to trade will do this. All right, so anytime that we're leaving, you know, tops like this, highs, or there's a situation where we're gonna have for example, a double top, right? Oops, I messed that up. Anytime we're gonna have a double top like this, or anytime we're gonna have a double bottom like this is like basically highs and lows liquidity, right? So there's liquidity sitting at the double top, double bottom, because that's where all the stop losses are. So in short sense, you could just really think about where are people's stop losses, and one of the great ways to understand is that it's going to be in highs and lows, double tops, double bottoms. All right, that's one way of looking at liquidity. That's one sense of liquidity. The next example of liquidity that we can kind of look at is ranging liquidity. This is typically a market that you want to stay out of. I don't like trading this market at all. I'm not trading a market unless it's a clear trend on the 4-hour, and then we can do a supply and demand situation on lower time frames. But you will have markets that are just, you know, doing this literally, and you don't know what's going to happen next, but they're just kind of like moving like this. So the market is basically generating liquidity to do what it needs to do, because it just doesn't have enough power to push in the direction that it wants to. There's liquidity sitting there, there's liquidity sitting here. On the same pair, CAD yen, we're going to look at an example of the same thing. Typically what will happen is something like this: liquidity taken from the bottom, liquidity taken from the top, and then it's going to decide which way it really wants to go. It could really be down, but first it'll grab, you know, the longs, and then the shorts. There's you know, buy stops and sell stops sitting in these areas too, but I don't really like talking about them. I don't think they're definitely liquidity, but you know, there's no reason to overcomplicate things. So and then the next example we can go to is trend line liquidity. So you'll see that whenever the market is trending, this is almost the same thing as highs and lows liquidity. It's the same thing whenever, but the better example here would be to draw basically a clean trend line, right? So if there's like a clean pattern that's being drawn, right? And the best way is like if this is a downtrend and you have a key level here and you're trying to take a short, you know that once we break through, it's going to go down sharply because there's tons of liquidity sitting on this trend line. For it could be beginner traders, other traders that are trading reversals, which a lot of new traders do, right? A lot of actually like experienced, like people love trading reversals for some reason. So always trend line liquidity sitting at places like this, and then key levels, there's always liquidity. So if there's a major level like this that we touched, you know, in the past at some point, if it's a key level like this we touched a long time in the past, and then we spend a lot of time here, and people are anticipating that it's going to come down and bounce off of it. Majority of the time it'll do a small bounce and then grab the liquidity, either to then go back up or you know, just keep trapping people off of this key level area. So if you need to watch this video again, go back and watch this video. If you think this is a simple and understanding example, I'm about to move into the real chart work. Please go ahead and like the video, man. It really helps me out in creating more content like this. It only takes a second. And also pause the video right now and drop me a comment. Let me know if this makes sense, if this is too simple or overcomplicated, or you know, stuff that you may already know, right? So but I did not know this like 2 years ago, right? I was somebody who was just trying to understand every little subject, and I was searching it up, and it was never in part of any of the courses, or never made sense in any of the courses. So anyways, one of the pairs that I hate trading the most is CAD or NZD, and majority of the time it's because these pairs don't respect key levels. They do a lot of liquidity grabs, they do a lot of liquidity generation is the way I would put it, and I don't like that. I do not like those pairs that do that. So here you can see is a clear example of, we have a top that's been, you know, sort of formed, but mainly majority of the traders here are going to want to trade a reversal because they see that we're at a low and they want to catch a huge RR trade, which, you know, usually never works out. And there's the double bottom right here, right? So there's liquidity sitting below, there's liquidity sitting above. Now if I was to take a trade on this pair, I would want to go short at some point because I know double bottoms always get taken out. Also, this is a reversal. Also, we're on the macro side of things, we're in a downtrend, so always want to follow the trend basically. So that's where the liquidity was taken right there. It was a quick liquidity grab, right? And then it's gone. So let's see if we can find, if we can see it go into a direction of a trend. Oh, this is recent. All right, so anyways, we took the liquidity from the bottom side, we took the liquidity from the top side. So live example here, let's just go back to the daily and see. So it's actually, it's bullish. All right, so you wouldn't really be looking for a short. So let's see if we can find an example of highs and lows liquidity, right? So here's one right here, right? So there's we made a low right here, we made a high which is higher than this high, we came down, we made a low which is lower than this low. So these three areas have liquidity laying in them, right here, and right here. Okay, the market is going to now, so if you're following the trend is bullish, right? So you're going to continue to look for longs. And if you do, let's say you trade supply and demand, and you had this demand level drawn on here, number one, all right, number one, you know that this top will get taken out. There's liquidity sitting above. What would typically happen here is when you do take the trade, you know you'd be entering somewhere here, your stop loss would be down here, and your target would only be this thing right here. You would never go, so we're only going to target this area. Even if it's a 2.5% trade, that's fine. That's how you can use it to your advantage in taking profit. Now, in terms of preventing stop losses, let's say you were going to hold this trade at break even, or let's say you were going to hold this trade for, I don't know, like as a swing trade or something. You would have to understand the concept that there's liquidity sitting below this low. If the market is going to move up, it's going to come and get that first and then move up. That's exactly what happened here. It took this out, dropped right back, took out these stop losses right below here, anybody that was break even, and then pushed into, you know, wherever it wanted to go. Took those areas out and then moved into that direction. It's very hard to catch this second pullback because you don't know if it's just going to continue dropping. Typically better to stay out of it, or if you see that it's a liquidity run has happened, then you can enter here as well, right? So that's one. An example of a trend line one would be like, this is a trend line, so there's liquidity sitting right below it. It's gonna, this first break will just take everything out right away. Another one to look at is there was some sitting right below this area, this key level. This was a pretty key level in the market. As you can see, if we draw on our horizontal tool right here, or even if you draw it on right here, you can see that the wick, this wick right below it. So that liquidity was taken. Then we had some ranging liquidity. So I hope this kind of makes a little bit of sense when you start thinking about liquidity. You always want to know where you are in the market, where the liquidity sits, and if you're taking a trade, can you target the next high, low, the next double bottom, double top? I love targeting double bottoms, double tops when I'm taking my trade in a direction with the correct directional bias, because I know those areas are going to get taken out, and I always put like this little dollar sign there, and that's where I take profit. So that's a great way to identify where you're going to take profit. Now, the last thing that I was talking about in terms of using a tool you can always find is that I love using is the Forex sentiment tool. All right, whenever you're trading and you're trying to identify liquidity, it's always good to come here, and you can see like CAD yen right now is majority short. That means a lot of people are going short at this current moment. So what's really going to happen, right? Probably more than likely, since most people are going short, we have just now built a pool of liquidity right here. What do you think is going to happen? Come on, bro. This is when you start becoming a much better trader, when you start going the opposite direction of what everybody's doing. This is what changed my trading. It's simply going to be literally, now I don't know exactly what's going to happen. It would really depend when we touch this level and what kind of price action entry we can get here. But typically it should be something like this, quick grab, and then it's going to come down to this. It's going to take these people out, and it's eventually going to make its way back here. So I hope this video makes sense. If you need to watch it a couple of times, that's absolutely fine. When I finally did find a video on YouTube, I think eventually that made a little bit of sense. I watched it like 10 times. So if you need to watch it again, no problem. Consider subscribing if you haven't already to watch more content like this.